My name is Thomas, and this is For the Common. Thank you so much for checking out this video and the channel. Your support means so much to me, so I appreciate you being here. So we have just ended a really wild first quarter of the year. It's hard to believe 3 months have already come and gone, but it is March 31st of 2022. And if you've heard this term, a quarter, and you don't know what it means, if you take the 12 months out of the year, 12 months, and you divide that by 4 quarters, you get 3 months, and you get that 3-month period that makes up a quarter. So these quarters are really important in the investment community because they mark a long enough period of time to give a good progress report of the year. So if you think about companies, you've likely heard of their quarterly earnings release. That's where they talk about what happened over a 3-month period of time. And as well, investment managers do the exact same thing. So in my old job, as I interviewed portfolio managers, we would, about this time of year, give them all a call and we'd talk to them about their quarterly results. We talk about what worked for their portfolios, what didn't, and also talk about their outlook for the next quarter and beyond. So in the spirit of that, I want to do that in this video and also plant the flag for what a challenging 3 months we just experienced in the market. It has been one of the most challenging 3 months of my investment career, probably top 3, and we survived it. So excited about that, excited to turn the page on this quarter and into the next quarter, which starts tomorrow on April 1st. And I'm hopeful that the second quarter of the year will be a little bit brighter, a little bit better with respect to stock results. And additionally, in this video, I want to talk about some recent trades that I've done today to hopefully position myself better for the second quarter. And they're relatively minor, some trims, some adds to existing positions that I have, but I'll highlight that here. And then finally, and probably most importantly, we talk about it in all of our videos that you have to respect the rules of the road, which are you need to do your own investment research and homework, and you need to make your own investment decisions. I get things wrong all the time. We'll see that in the recent results of my portfolio, and you just have to really respect that I'm going to make mistakes, and what I do might not be the right investment decision for yourself. So do not make an investment decision just because I make it. And hopefully with these reveal videos, you'll be able to find some things that you like for your style. You'll be able to learn from my mistakes, and that's the whole point of it. So I'm going to go ahead and jump into my portfolio now. I've talked about in a lot of my last portfolio videos how the last 3 months have been really quite challenging. So I don't plan on talking a lot about that, but I do want to highlight this performance tab, which I think is really interesting, and it shows the results for the portfolio over a certain period of time. And in the spirit of the last quarter, we'll look year to date, and you can see from the beginning of January 2022, my portfolio went down in the ballpark of around 70%. Through March. Wow, like I said, tough run. And then it bounced back here into the end of the month, which has been great, but still pretty challenging. To take that back even further, if you go back to the year view, you'll see that since 2021, the portfolio actually did quite well, and at one point in November was up around 70%. That's pretty crazy, 73. And then that whole nice round trip all the way down, which I attributed before to primarily me being an idiot, number one, but as well the margin that I had in the account, and then in addition to being exposed to a lot of the high growth software names that have really been under pressure over the last 3 and 4 months, and then bottomed out back into middle of March, and then now again that rebound. And interestingly, I haven't showed this either. You can see that I'm along that 2.1 million of stock with the margin that I have. And then across my portfolio, a lot of it is concentrated in technology, the vast majority of it. And then in addition to that, we have communications, which is more technology companies like Google. And then in consumer cyclical, you've got Amazon, you've got Tesla. So it's a really technology-focused portfolio, and something I look forward to diversifying down the road as I kind of rebuild this portfolio after my margin call. And then you can see here the short position that I have with respect to the margin is about 1.2 million in margin right now. So back on the portfolio view, you can see that the net liquidity is right around 964,000. It's about what it was in the last video, and the account did go above $1 million for a couple of days over the last week or so, but has trickled back down below it with really the results of today, which today was kind of an interesting day. If you look at the price action, it was flat for a lot of the day, and then we just kind of had this big sell-off into the end of the day. And that you can get some really weird things at quarter end that can happen because a lot of portfolio managers, like I said, those quarterly periods are important, and that's usually when they report their holdings to the public. And so they'll try and do a lot of portfolio trades at the end of the quarter to get their portfolio to look exactly the way they want it when they're reporting their holdings. And so things can get a little iffy at the end of the quarter. And so maybe that's, what happened today. It's a little bit hard to tell. But again, portfolios at 964,000. The top 10's about the same as we saw before: Amazon, Snowflake, Tesla, Crowdstrike. Salesforce, Google, Microsoft. But then importantly, Crowdstrike. I did make a trade today to trim it a bit. I talked about doing that, and I decided to make that trade today. It had crept up in its total size from to about over 100,000, which for me is a little big for my position in Crowdstrike. I got a little excited buying it over the last year, and so I wanted to trim that a little bit as it's done well. And then I also trimmed a position that I had in Palo Alto Networks. And if I go to the trade ticket view here, you'll see that those were the two things that I trimmed today: Crowdstrike and Palo Alto Networks. And because of, really in a kind of tragic way, because of the war in Ukraine, software security companies have actually been performing pretty well because of the risk of cyber attack from Russia. So as a result, you've got Palo Alto Networks that's, if you go down here, at its 52-week high. And it's a company that I've owned for a long time and has done really well for me over time. But a lot of that performance has happened more recently. And because of that, I decided it was time to trim the position a bit. And if I go back to the portfolio view, you can see Palo Alto Networks, it was around 50,000. So I took it down by around 6,000 today. And I'm up about 400% in that stock. So one that I really still like, I have a strong belief in, but I didn't need it at quite 50,000. And I had some other stocks in mind that have not performed as well that I wanted to add to. And that was, again, similarly to CrowdStrike because of the cybersecurity demand out there because of cyber warfare risk. CrowdStrike has done pretty well in this last little bit. Rebounding off its low, but still down 23%. And it's an expensive company from the respect of price to sales. So, and one that I still really like, growing quite quickly at 62%. That's a lot faster than Palo Alto Networks that was growing. It's growing much slower. So you'll see here sales of around 30%. So that's why I still believe CrowdStrike is kind of the new technology with respect to cybersecurity. So I want to keep my position, but I decided to trim Palo Alto because of that slowing growth and because it's done so well for me. So then where to put the money? There's been a lot of unbelievable just carnage with respect to some technology companies out there and the price that they've fallen to. I bought a lot of Microsoft and I thought about buying more today. But one company that I've owned for a long period of time that I really like is Atlassian, so ticker TEAM. It's a interesting software business. It's focused on collaboration, and their real flagship product is called Jira, which people use to help make creating software more collaborative and easier to do. And it's a really great tool. Get a lot of great reviews and a staple in the software creation industry. So that company has also done well for me, and I've owned it for a long time, and I wanted to add more as it's still down in the ballpark of 40% from its 52-week high. Again, expensive stock from a price to sales standpoint, but one that I think has a really bright future still and a great competitive advantage because of its position in this collaboration software. And then one that I was really excited to buy that I've been adding to over time is Airbnb. So this is in honor of booking an Airbnb recently for me and my wife, and we're excited about the trip. And I think a lot of people are excited about getting out and traveling more. And I think Airbnb is going to be a direct beneficiary. It IPO'd earlier. Gosh, I guess it's probably been maybe a year. Yeah, right about a year. And it hasn't traded all that well since its IPO, which can happen after these really big IPOs that have a lot of hype. And so we've seen that here for this stock. It's consolidated over the last year, but it's one that I want to own for the long term because it's got, in my opinion, a really bright future with its asset light model, right? They don't own the properties that they rent out. They're just in exchange for people to be able to go and find them, then to pay for them. And it's great for hosts because it's the best search engine for these types of properties to stay at. And the properties are really, really great. And we've had amazing experiences in Airbnb in the past in our travels. And so one that I was excited about the IPO, I've been excited since really over the last year to add more, and I was able to do that again today. And the stock is still expensive at 18 times price to sales. That is not a cheap stock. That's trailing, but it's growing really quickly because of the reopen trade, people getting back and traveling. And here's that high gross margin number because of, as we talked about, it's an asset light business. It's really a software business. And then in addition, it's still down 20% from its 52-week high. So in my opinion, really great company, bright future, good competitive advantage in its network. And I was excited to buy about $5,000, I think, today of Airbnb stock. And then as well, I bought two other stocks. I bought AMD. So AMD was down today due to some news from an analyst that said there was concern around the PC cycle, slowing PC sales. That doesn't matter to me. I love AMD for the long term as a real innovator with respect to chip design. And I've seen this stock go from $4 to where it is today, and I just totally should have owned it the whole time, but owned Intel for a while, and obviously this was the winner to pick. But AMD is 23 times forward PE is pretty cheap. Who knows? There's a lot of talk around peak semiconductor demand right now because of all the chip shortages, but in my opinion, in the long term, that won't matter as there's so much demand for semiconductors going into everything from data center, autonomous driving, our computers, gaming, crypto mining. I think there's a bright future for AMD, and they're one of the leaders in innovation and great CEO. So one that I also added to on the weakness today, down about 8%, and over the last several weeks, it's been trading down, so it hasn't really rebounded a lot. So one that I wanted to pick up additional shares of. And then finally, I bought some more Shopify. So wow, if you want to see a stock chart that has just been absolutely crushed in the last several months, Shopify is down about 61% from its 52-week high, which was back here in November. Just it correlates well with my portfolio too. And it's a really amazing company, again, that I remember looking at $100 and taking a pass on it. I didn't want to own the business yet, didn't quite understand it, and I ended up buying it at $1,000 not that long ago, and that was good, and then it wasn't. As now it's trading, at 675. So as it's come down so substantially, I really believe in Shopify as the new way that small businesses can go out and build their e-commerce platforms on their own website. It's really neat and kind of counter to the Amazon position that I have. So Amazon is that big behemoth, and then you have Shopify that helps enable small businesses. They have Shop Pay, which is really convenient, and historically it's been a great stock. It's still one that is expensive too from a price to sales standpoint at about 20 times. So it's not a cheap one by any means, but it's also down 61%. So it goes to show you how expensive it was before. But really what's happened is that people were worried that COVID is artificially boosted their revenue, and now Shopify is guiding for a little weaker revenue into the future. But for me, I think Shopify is a great company that I want to own for the long term, and I decided to buy some shares. And the last thing that I wanted to highlight, which I thought might be fun today, is my loser of the day. And so I got a lot of losers down here as we go down, but the one that's the loser of the day is UiPath. It's down 25% today. And if you look at the stock chart for UiPath, it's been a really incredible run since the IPO of just absolute disaster. And it's down 76%, trading at 14 times trailing price to sales. And it's a really interesting company because they're on the forefront of some amazing new technologies. But if you look at the stock chart, you'd think that the whole thing is broken, especially after a 25% move today. And what they do is focus on robotic process automation, which is a neat buzzword for they're trying to find ways to make workers more efficient by enabling them through software and automation in software. So you think of artificial intelligence. UiPath is trying to empower that for every worker out there and make them more efficient. And so you can read about all of their products that it's really seems very cutting edge. But from the standpoint of the company, if we go down and look, why would it be down 25% in the day today? Interestingly, it's in my opinion definitely something that's driven by short-term worries, and for me, I believe the long term is still really bright for this company. So, revenue is still increasing 39%. That's a big deceleration from where it was before. So that's something that's noteworthy. But they have a really awesome net retention rate of 145. That's extremely high, and still one of the best in the software cohort. But the real challenge for the stock came from their financial outlook, which a lot of that was due to some business that they have in Europe, substantial part of their business. And because of that, it's going to negatively impact their revenue. And they're trying to be prudent to be conservative in their estimates, and as a result, the stock got really negatively punished. And as well, they're doing some transitions for their business, going to a software as a service model, SaaS. So that does hurt their revenue growth in the short term. But overall, my loser of the day is one that I still really have a lot of confidence in. So an interesting one you could look at if you are curious. And transitioning back to really my thoughts for the future of the market. And this quarter has been absolutely wild. It's been a really crazy thing to live through, experience, learn some hard lessons. But when I look forward, I don't think that we've got an easy road ahead. And that doesn't mean the stock market won't go up. But I think more importantly, there's going to be more volatility. And we don't know if there'll be another surprise event where the market's going to end up going down because of that, or if there'll be positive news and the market will rebound sharply. It's too hard to tell. But I think that goes to a really important takeaway for me that I believe all investors should follow, is that you cannot time the market. And it's very hard. There's massive groups of analyst teams at these really impressive, sophisticated organizations at investment firms, and they all cannot time the market. It's very, very challenging to do because of the complexity of the economy and all the different inputs. So predicting it is just a coin flip. And important to say that regardless of where you think the market might be going or where I think the market might be going, the key is to really look for those great businesses that you can believe in long term, that you think have good futures. And that's what I've built here, is a collection that I believe of great businesses and positioning in great businesses that hopefully have bright futures, can stay ahead of competition, and their management team can make a lot of money for shareholders along the way. So that's the goal of the portfolio, of the channel, the strategy of the channel. And as well, I really hope that you found the video useful and the portfolio reveals useful. Hopefully there are a few nuggets in there that you can take away as things that you like for your own investment style. And again, I could be wrong on all of this, so take what I say with a grain of salt. But again, I really appreciate your time and checking out the video. If you got any use out of it, I would really appreciate a like or subscribe. It helps build the community for the channel, for the common. And again, we'll see you in the next one. Thanks again.